Okay, so the economy says you're fine, your bank account disagrees, and somewhere a PhD is insisting you're thriving while you're putting groceries on Afterpay.
Yeah, economists are like, households are in good shape, and your checking account is like, we need to talk about your little eating habit.
Welcome, everyone. This is Weekly Market Breakdown, and today we're breaking down inflation, wages, and housing because apparently the economy refuses to pick just one way to be confusing. Let's start with the allegedly good news. Recent research says wages have grown about 12.4% since late 2022, while overall inflation is up around 9.1%, plus rent growth lately around 1.8%. So on paper, renters actually have more breathing room.
The term on paper is doing a lot of work there. On paper, I can also retire at 45 and own a lake house. In reality, I have a succulent and a Costco membership.
But the math does say if your wages are up 12.4%, prices up 9.1%, and rent up only a little, you technically have a bit more discretionary income left after paying the landlord. So yes, you may now afford guac and therapy, just not in the same week.
Doctor, I'm stressed about money. Okay, that'll be $200. I think I now see the source of my stress.
Then the St. Louis Fed kicks down the door and is like, funds over, here's a 20-year chart. Since 2000, home prices have massively outrun incomes, which is why homeownership feels less like a milestone and more like a side quest with impossible difficulty settings.
Trying to buy a house in 2026 is like trying to get Taylor Swift tickets. You log in, hit refresh a bunch of times, and some investment firm just bought the whole concert.
So, we've got this split reality. For renters, slower rent growth plus faster wages mean the monthly squeeze has eased a bit in a lot of markets. For would-be buyers, decades of price-to-income nonsense mean the starter home has been rebranded as generational wealth, batteries not included.
And your parents are saying, we bought our first house for $80,000 and a firm handshake. You. Cool, my bank just pre-approved me for a studio and a sense of humiliation.
Meanwhile, commercial real estate analysts are out here like, consumers look solid, their balance sheets are stronger, spending is holding up, retail and multifamily are fine. Translation, you are personally keeping half of American strip malls alive with your anxiety purchases.
Every time you buy something at Target you didn't need, a real estate analyst whispers, the consumer is resilient, and adds another bullish arrow to their revenue chart.
Consumer advocates, though, are the ones saying, hold up, averages lie. Some households are totally fine. Others are one surprise bill away from hosting improv night, theme, the 2008 housing crisis.
The macro chart is a smooth line drifting upward. Individual budgets look like a polygraph test for someone who's definitely lying.
So what do you actually do with this? If your wages are rising faster than your personal inflation, that extra cash is precious. Use it to pay down high-interest debt, build an emergency fund, maybe start investing. This is not the moment to celebrate by subscribing to 4 new streaming services you'll never watch.
Yeah, your diversified portfolio should not be Netflix, Hulu, Disney+, and whatever platform has that one show you swear you're going to start binge-watching.
If you're renting, slower rent growth plus more apartment supply in some markets is a real break. That's macro speak for you can exhale slightly. But if you're trying to buy, you're fighting a decades-long structural problem, not a personal failure.
So when a boomer says, just stop buying lattes, remember, the gap between home prices and incomes is not an issue with my cappuccino.
Big picture, the consumer still looks like the backbone of the U.S. economy. Spending is holding up, which supports jobs and commercial real estate. But it's a very tense backbone that needs a chiropractor and a nap.
So if you feel cautiously okay and low-key doomed, that's not a bug. That's 2026 for you. You're playing life on hard mode housing edition.
We'll keep reading the charts so you don't have to stare at them at 2 a.m. and Google, what is discretionary income and why don't I have any?
And remember, it's not just you, it's the math. And the math is rude. Thanks for watching, and check out our other videos and subscribe for updates on new content, because if the economy is going to be this dramatic, it could at least keep giving us material.